This is a textbook trade setup. I want you guys to learn this. I teach it to you guys. It's called the TTG triangle. It's an afternoon TTG triangle, and it's set up for us beautifully. Now, MGOL gave you this little push there in the morning. I wasn't even paying attention to the stock in the morning, and then a member brought this stock to my attention. This stock was not even initially on my watch list, but this is the point of trading in a group. When you trade in a group, if I only have 2 eyeballs, I can't look at 1,000 stocks all at once. But if I have thousands of members that are all educated, they all know what to look for, chances are we're never going to miss a setup. And I had a member bring this setup to my attention, and I pulled it up on my screen, and I was like, wow, this actually looks really damn good. Let's take a deeper look at this. I love this setup. We took the trade long. It ended up being a banger for us, like, I don't know, 38% gain, something like that, long at $2. My final take profit was $2.75. In at $2 at $2.02 was my actual fill. Out at $2.75. What is that? 36%, 38%, 36%, something like that. 36%, I think. Let's go through the setup. I want you to understand fully the premise behind this trade so that when next time you see one of these, you're going to be able to capitalize on this move, on this setup. The lesson that I want you to take from this is when a stock breaks through the high of the day with the heaviest volume of the day, the chances are greater that the prior high is going to start acting as support. But you want to look for other indicators to also line up with that prior high to give you the confidence that it's going to hold that support to give you a buy zone. So when I draw a line across this level here of the prior high, we also go to a daily chart and we take a look at this line on the daily chart. And does this line have relevance on the daily chart? Well, on the daily chart, you can see it used to be a big level of support until it was broken there back in March. And then you see it became resistance. And now you just plowed through that level in the intraday with the heaviest volume of the day. So now when I go back to the intraday, that's the daily chart you're looking at right now. But when we go back to the intraday, okay, so we just, a couple of pennies off, about 5 cents off, adjust that line for intraday. And you see there's the current high of the day. We get up and retest that high of the day. And then we break through it. And as soon as you break through it, what I want you to really focus on, and we'll move that message on the bottom of the screen real quick, Joe, so we can just see the volume, please. You guys can see here at the bottom of the screen, look at the volume bars that came in on the break through the high of the day. By far, the heaviest volume of the day. It's not even close. More than double your previous volume bars to there, guys. I mean, look at this volume. I mean, this is the heaviest volume bar of the day by far. When you see that, that increases the likelihood that this previous level, this previous high of the day, starts acting as support. So what do? You look to see, wait for the stock to pull back towards that level on decreasing volume. So just as important as it is for the volume to be increasing on the way through that level, you want it decreasing on the way back to that level. And then here comes the pullback. There comes the pullback back into this level. And look at the volume. See how the volume is considerably lighter? Half. Look at the volume on the pullback. Half what the volume was when you broke through that level. That's exactly what I love to see. I stepped in right there with a bid 202. Bang. There's the long 202. So we take the long there. We're filled at 202. The stock went as low as I think $1.96, if I'm not mistaken. Yep, we went to $1.96. We took the long at 202. Okay, there's the long at 202. There's the previous resistance. We're long the stock because now we're going to see if this level acts as support. And this, my friends, is what we call a TTG triangle. That is what we call this setup. You now put in a series of consecutive lower highs that form a downtrend resistance line. Here comes the downtrend resistance line, and that downtrend resistance line creates the triangular pattern. So see the triangular pattern that you see here? This is a triangle pattern. Okay, this is what I call a TTG triangle. For those of you that are experienced traders, it is a specific variation of the common ABCD setup. I call it a TTG triangle when specific criteria are met. There's the entry at 202. We test it one more time for good measure. You can see clear as clear can be. This level now acting as an area of support, and the rest is absolutely history. Okay, the rest is absolutely history. The stock just absolutely rips face. And we are just ripping profits off into the closing bell. And my final take profit off the table at $2.75 in the after hour session from the 202 long. Guys, this is absolutely picture perfect textbook setup. Learn it, Study it, recognize it, trade it. Favorite setups to trade. It's one of my favorite patterns. I teach it to all of our members of True Trading Group. I just gave you a crash course in it.